Welcome back, everybody. Ready for another deep dive?
Absolutely. Always ready to dig into the market's latest twists and turns.
Well, today we've got a report fresh from Market Deep Dive. It's December 12, 2024, end of the trading day. Imagine you're checking your portfolio, you know how it is, and this news could have you celebrating or maybe just scratching your head.
Yeah. December's always a wild ride, the holidays, end of year stuff, but this report has some curveballs for sure.
We're talking the Nasdaq hitting 20,000. Can you believe that?
It's a milestone, right? But then it closes down.
That's what I'm saying. It's like up and away, but also like, wait a minute, what's going on? Plus, we've got these tech giants. Some are soaring to new heights while others are taking a tumble. And then there's this inflation data that nobody saw coming.
Yeah, the PPI numbers were a bit of a shocker.
Okay, so let's break it down for our listeners, starting with the big picture. What's the headline here? What do we absolutely need to understand about today's market moves?
It's the push and pull, you know. Long-term optimism versus this short-term anxiety. We saw the Nasdaq break 20,000 for the first time ever. That's historic. Shows this belief in technology and innovation, the future.
Right, the future is bright.
But then all the major indices, the Nasdaq included, they end the day lower.
Suggests?
Immediate concerns, fears are weighing on investors right now.
Okay, so picture this. You're on a mountaintop, amazing view you can see forever. The ground is shaking a little bit.
Exactly. And one of those tremors is definitely from the inflation news, the PPI Producer Price Index. It came in hotter than expected.
BBI tracks wholesale prices, right?
Yeah.
But for our listener who might not be, checking this daily, remind us, why should they care about wholesale prices? Why can a jump in PPI send shockwaves through the whole market?
Okay, so think of it like this. Businesses pay more for supplies.
Yeah.
They got to pass those costs on to the consumers eventually, which means higher prices for everything, and bam, that's inflation. The problem is if inflation stays high, the Federal Reserve, they might have to keep raising interest rates.
Cool things down.
Right, and that makes borrowing more expensive, slows down the economy. Not good.
Okay, so this PPI jump is making everyone wonder if that December rate cut everyone was so sure about, if that's even going to happen.
Yeah, the market was almost certain we were getting a cut. Now it's murky, The CME FedWatch tool, which tracks market predictions about the Fed, it's still showing a high probability of a cut, but it's down from just a few days ago.
Enough to make some investors nervous.
Oh, yeah, that shift alone is enough to spook some folks.
Okay, so we've got uncertainty swirling around the Fed. Let's move on to tech, which is always a roller coaster. This report shows some companies hitting all-time highs, others are getting crushed.
It's like two different markets within tech itself. On the one hand, you've got companies like Alphabet and Tesla. They represent the future AI electric vehicles are hitting record highs because investors are betting on their continued growth and innovation.
Alphabet's new AI model, Gemini 2.0, a lot of buzz around that. But does this really mean they've cracked the code on AI, or is this just another hype cycle? What should our listener be looking for to see if this has staying power?
It's the million-dollar question, right? Got to look beyond the headlines, got to understand the underlying technology. Is Gemini 2.0 a genuine leap forward or just an incremental improvement? How quickly can they turn this tech into real-world applications and revenue? Those are the questions savvy investors are asking.
Makes sense. And on the flip side, we have Adobe, their stock down 11% today. What happened there?
Revenue outlook for 2025, it disappointed investors. They're projecting lower revenue than analysts were expecting, and that's making people nervous about the company's future growth prospects.
So connecting this back to our listener, how should they interpret this divergence within the tech sector? What's the bigger picture message?
It's fascinating how this reflects the broader economic concerns we've been talking about. Investors are clearly excited about companies like Alphabet and Tesla, leaders in innovation and growth. But at the same time, Adobe's stumble, even if it's specific to their own projections, highlights the anxieties around a potential economic slowdown.
So even within tech, which is often seen as, a safe haven for growth,
we're seeing this tension between optimism and caution playing out.
Okay. Let's step back from tech for a moment. Look at the rest of the market landscape. What about the other sectors? What were the highlights there?
Mixed bag, as you might expect. Energy stocks are showing some resilience, probably fueled by those ongoing global tensions, which often impact energy supply and prices. Consumer discretionary sector is a bit all over the map. Some retailers getting a boost from holiday shopping, but others are struggling amidst those concerns about consumer spending we talked about earlier.
And just to round out the picture here, quick update on the bond market. This report mentioned a rise in the 10-year Treasury yield. What does that tell us?
10-year Treasury yield. It's a key benchmark for borrowing costs when it goes up. Usually means investors are getting nervous about inflation. They're essentially demanding a higher return on their investment to compensate for the risk that inflation will erode their purchasing power. So this rise in the yield is another indicator that investors are adjusting their expectations in light of that hotter than expected PPI data.
Okay, so lots of domestic factors at play here. But how did the rest of the world's markets perform today? What's happening beyond our borders that our listeners should be aware of?
Globally, mixed bag too. European markets were pretty cautious today, waiting to see what the European Central Bank will do about interest rates at their upcoming meeting. There's talk of potential cuts there as well, so everyone's on edge.
And Asia's anything noteworthy happening there?
Asian markets were relatively subdued today, digesting news about potential currency devaluation in China.
Interesting.
That's something we'll need to unpack because it could have significant implications for the global economy and, by extension, for your portfolio.
Oh, definitely. It's all connected, isn't it? Okay, so we've covered a lot of ground here. But what about the future? What are the key factors our listeners should be watching closely in the coming weeks? What's going to shape the market's direction from here?
Well, there are a few things to keep an eye on. First and foremost, we have that all-important Fed meeting in December. Their decision on interest rates will likely send shockwaves through the markets regardless of what they decide.
Right, the suspense is killing everyone.
Then we have the upcoming economic data releases like retail sales figures, consumer sentiment reports, and of course, corporate earnings. Those will give us a better sense of the overall health of the U.S. economy and how companies are performing.
And, of course, we can't forget about those geopolitical developments, which always have the potential to throw a wrench into the works.
Exactly. Those global tensions we talked about, the situation in China, anything could happen. And finally, as we head towards the end of the year, we need to keep in mind that institutional investors often adjust their portfolios at this time, which can also impact market movement.
Okay, so we've got the Fed economic data, corporate earnings, geopolitical risks, and year-end positioning all happening at once. It sounds like we're in for a potentially bumpy ride.
Buckle up.
So as we wrap up this deep dive into the market, what's one final thought you want to leave our listener with something to ponder as they continue their investing journey?
Here's something to think about. We've talked a lot about data trends and analysis, but ultimately the market is driven by human behavior. It's the collective actions of millions of individuals, each with their own hopes, fears, and beliefs that shape the market's direction. So as you analyze the numbers and follow the news, remember to also consider the human element, the psychology of the market. That's where you'll find some of the most insightful clues about where things might be headed.
That's a fascinating point. So understanding human psychology might be just as important as understanding economic data.
Perhaps even more so, after all. It's people who make the decisions to buy, sell, hold, invest, or divest their collective actions create the ebb and flow of the market. So as you continue your investing journey, pay attention not only to the numbers, but also to the human stories behind them.
Thanks for joining us on this deep dive.
Thanks for having me.
We hope you found it insightful and engaging.
I hope so too.
Until next time, keep exploring, stay curious, and never stop asking questions.